Well, Magnus Haystack says, stay away from property. Rupert Finnemore is the chief executive of Easy Properties. So we're going to have the other side of the story, or maybe not. Let's see why Rupert thinks that he shouldn't be out of a job. People just love what Magnus Haystack says, even though he seems to be scaring the pants off them at the moment. I think more than 70,000 people now have read his treatise about why it's been a good idea to stay away from South African property. But you've, at Easy Properties, clearly it says property. So that's what you do. You're going to have to explain to us that there are pockets, I guess, that do offer value.
Yeah, I mean, I saw that article and I read it with interest. Having been in the property industry for about 20 years, every time I see a Magnus Haystack article, I wince a little bit because I don't think there's any bigger property there around. But yeah, it was really interesting. I mean, to see that, you know, the listed property space is down by 50% in South Africa and up by 60% offshore. I mean, you know, it's difficult to argue with numbers like that.
But what does Easy Property do? And I've asked this in a broader sense because we know Easy Equities. You've got over 1 million people now who have actually warmed to the idea of being able to buy shares in fractions. So it's what you want to spend every month rather than what the share prices are that forces you to buy those numbers of shares. Fractionalization is a option that your colleague Charles Savage has told us about, can go into other asset classes as well. And clearly, you're in property. So how does it work on your side?
Yeah, Alec, it's an interesting one. You know, there are obviously so many friction points when it comes to investing in, well, traditional investing in property. And I'm not talking about the kind of funds that Magnus was talking about, but just investing in traditional real estate. You know, one of the founding tenets of Easy Properties was to reduce all of those friction points, to solve for them. And so we've been able to invite people, you know, it's often a word that gets thrown around in the Easy environment, but democratize that access to property investing through solving those things. So you mentioned Easy's got like over 1 million, but it's actually closer to 2 million now. In terms of registrations, I think it's 1.7 million. And Easy Properties has got 300,000 of those clients registered for Easy Properties. We've got a little over 90,000 separate individuals who are investing in property itself. And through this fractionalization, you know, we've removed a lot of the barriers to entry. So for us, there's no minimum. So people can invest with as little as R1 in so far residential property. And I think also, you know, there's a long political and social and psychological attachment to property in this country, and people want to own and invest in property. And you know, while the market itself has gone through, you know, quite a turmoil, there are definitely pockets that are doing particularly well. Along the Atlantic seaboard in Cape Town, Stellenbosch, I mean, you know, it's almost inaffordable now, Stellenbosch. And it's obviously got like a knock-on effect to all of those other surrounding areas as well. So always pockets of excellence.
It's interesting the point that you make about investing in residential property. Many years ago, there was a stock on the JSE called Stanprop, and Stanprop was a way into residential property. That was what the Standard Bank Group put it together for in the first place. But that disappeared a long time ago. And if you want to invest in any shares, you only can go into retail, commercial, which is office space, or industrial properties. Whereas what you're talking about here is a completely different area entirely. Now, having gone through the process of selling a property in Johannesburg, I know from my own wounded wallet exactly how much the market has fallen. Not exactly, but I've got a very good feeling for the scale of the decline in the market in Johannesburg. What's happened on your side? You've got these, as you say, 90,000 people who've ponied up some cash. Have they also seen declines in the value of their assets, or have you perhaps been picking out different pockets?
Well, I think first and foremost, we are picking out different pockets. You we investing primarily at the moment. We are looking to diversify into other asset classes, but so far it is residential sectional title properties. One of the benefits of having a big crowd-funded checkbook is that we are able to negotiate significant discounts. So we get a bit of a running start at these markets and the capital growth.
Just stop there, Rupert.
Yes.
Apologies. Unpack it, what you mean by sectional title. Is that flats, apartments?
Yeah, apartments, townhouses, things like that. So not full title standalone houses. Generally, we'll take out a pocket of a number of units within a sectional title development.
And then rent them out yourselves or get somebody to manage that part of it for you?
Well, yeah, it's interesting. When we first launched, we had an arrangement with a third-party rental management company. But like any startups, we were met with an interesting thing. We handed over our first 50 units that we'd taken transfer, and that company went into insolvency that very week.
Ouch.
So
how did you miss that one?
Well, yeah, it's an interesting one. What we did have to do was build up a rental management capability almost overnight, which has worked very well for us. And, I think one of the realizations was that nobody's has got a better incentive to look after these properties than us. And so we're managing over 300 different units at the moment. But one of the biggest things that we've managed to do is actually build in a rental guarantee with these developers. The developers are potentially having a bit of difficult times depending on the product and area selling their units. And so the fact that we're able to collectively put all of this cash together and go off and buy like a big parcel of units means that we've been able to negotiate some seriously good discounts for our investors, which obviously both the rental guarantee and these discounts, largely mitigate some of these risks out in the market at the moment.
That's such an interesting model. So if I, as an individual, wanted to invest in these sectional title units or, say, an apartment, and we see them going up all over the place in Gauteng, you would, and I'm sure elsewhere in the country you can help us with that in a moment, you would have to put a few R100,000 as a deposit and then take a loan, and you're in for quite a big chunk on one unit, which you then have to pay somebody to find a tenant and make sure the tenant doesn't squat there and actually pays you, etc. The risks that are involved in that are significant. From what you're saying is that on Easy side, you first of all you raised the money for from your community, and then through force of circumstance, you're now managing what is a significant size portfolio of 300 of these residential units. So I guess building expertise while also cutting out a third party.
Yeah, and we're also able to preserve a lot of the yield for our investors. As you'll know, generally these rental managers charge anywhere between 8 to 10% of your annual rental to manage these, and we're doing it for significantly less. I think our average rental management fee is about 4%. So we're doing it to look after the investments themselves.
And how do you get squatters out?
Look, it's very tricky. It's one of the instances which I think people who've been burnt before, you've got to go through the courts. It's as simple as that. There are a lot of rights associated with tenancy, and you can't, in the old days, maybe you sent a few heavies around or you took the front door of the property and people tended to disappear. But, for better or for worse, tenants have got a lot of rights now, and unfortunately it takes a little bit of money to eventually get somebody out who is squatting in a property. I think one of the benefits of what we're doing is, you alluded to it just now, was diversification. If you and I clapped some money together and bought an apartment in Rosebank, and we've got a tenant there that's not paying their rent or squatting or something like that, I've got a big problem in our hands. With that being our potentially our one investment unit. I think one of the benefits now is that who've joined us from the beginning, since we launched 2 and a bit years ago, have got a share across 300 different units. So, if you've got 1 or 2 people that aren't paying, you're still collecting rent and returns on the other 298 units or so. So it is one of the big benefits of this diversification opportunity.
And what kind of returns have they been enjoying in those last 2 years?
Yeah, it obviously varies from area to area. So what we've tried to do is look at some really high yielding properties with potentially slightly less capital growth, in some of the areas in and around the airport, potentially some of those Atlantic seaboard properties in Cape Town. And then we've also looked at really good mixes. So, generally, we're about to launch some really good student accommodation coming up. We've got 2 current ones at the moment that are offering close on 7% net yield. But those ones also we've bought at a 10% discount. So I think the particular IRR on those ones are north of 9 to 10 to 12%. But it's one of the instances that each one of these property collections that we have has its own kind of investment criteria and returns, which also depends on the investor's appetite, what kind of risk profile they have and what they're interested in investing in.
So the whole story with property is that you get a running yield. In other words, you have a tenant who pays you income, plus you get capital growth. But what happens when you get capital contraction, as I have just shared with you in my own property in Bryanston?
Yeah, so I mean, that's obviously just the nature of any kind of investment. I mean, there's no such thing as a risk-free investment. If there is some kind of, first of all, we raise 70% equity, so we've got quite a small exposure in terms of the loan to value on these properties. So it's not going to ever be a case where we've geared it up to such an extent that if there is some kind of contraction, we end up owing money when we exit these investments. But the majority of our investment periods are between 5 and 7 years, and we've only been going for 2 and a bit years. So hopefully by the time we look to exit some of these investments, the market conditions have improved. I mean, if it's not the case, then there's always a bit of a risk on those contractions. But I think in the areas in which we've invested in and bought, I think the likelihood of those real contractions are mitigated, and especially in that sectional title market as well.
So what are the parameters within which you will operate? In other words, those 300 apartments, townhouses, etc., what is the capital values? What would each of them cost if they were to be bought individually, the range?
Yeah, so I mean, those we've purchased about 300 million rand. Our portfolio is about 320 million rand now, which, just as a little aside, is really quite extraordinary if you consider that our average investment size is 1,300 rand. So it really kind of points to the crowd-funded nature and the access. You'll have to just take me back to
the most expensive property that you have.
Yeah, so our most expensive one is less than 3 million rand. These are sectional title apartments, anywhere between 900 and 2.5 million. And generally, that's the kind of area in which we play. There's obviously a lot of research that goes into the particular markets in which we purchase these properties. They've got to offer, some decent upside, potentially take advantage of some of the semigration, any of these kind of economic factors. I think we've done a fair amount in Rosebank of late. There's obviously a hell of a lot of commercial development that's gone on. There's enormous amount of planning permissions that have been passed by the municipality, and there's a lot going on in that Rosebank market. And so, that was obviously a good one for some of those developments that we've done in the area.
But that's Rosebank, Johannesburg, Rupert, not Rosebank,
yes.
Cape Town.
Yeah.
Mm-hmm.
I mean, that Atlantic seaboard, we've bought a lot along the Atlantic seaboard now, which was often, such expensive properties that it precluded from so many people from investing in those areas. So now our guys are able to invest a lot in the Atlantic seaboard along Sea Point. This particular Christmas period, we saw some really amazing returns. Our one property, 410, it's a short-term stay environment. We bought those for about 2 million rand, give or take. Over this period with short-term stays, we had netted about 45,000 rands worth of income per month on those properties. So it was a humdinger season down in Cape Town for some of these properties.
And probably just going to get better and better now that we've got COVID behind us.
Yeah.
Occupancy rates, what do you aim for, given that you have to be very careful about who you allow in?
Yeah. So again, that helps us a lot with the rental guarantees that we've got in place with the developers. So for those period of 2 years, irrespective of whether they're able to rent those out or not, we're getting 100% essentially real occupancy figures back. But generally, our occupancy rates are very good, north of 90%. Each one of these properties has its own kind of metrics and stuff. But yeah, the occupancy rates have been very good, and the collections have been very good as well.
You explained that you've done well out of the Atlantic Seaboard and you've invested heavily in Rosebank. Where else are you looking right now? Let's just say you had a super wealthy investor who likes the story, gave you 100 million. How would you deploy it?
Yeah, so I mean, one of the biggest things is we're looking to bring some offshore investments onto the platform. There's some great returns to be had, as we've seen from Magnus's article. But just to offer that offshore diversity opportunities is a big one for us. So we've been looking at some great opportunities in Australia, looking at some vacation style homes in the US, some European stuff. One of the problems for that is that, with the exchange rate, you don't get a hell of a lot of bang for your South African buck. One of the instances is an Australian property when we're looking at a 2-bedroom townhouse, or they call it a condo, but we had noted a townhouse, and you're looking at 20 million rand. So, yeah, that's a bit tricky. But we are looking at a lot of local diversification as well. We're busy assessing some really great medical suites and high care apartments in Paarl. A lot of other student accommodation, commercial, industrial. It's the full property spectrum that we are looking to offer. So, but those are the areas that we're kind of looking to move into now.
It's interesting you mentioned medical suites. One of our business partners is Orbvest, and they focus on medical properties in the United States. They've got a problem because that market is quite richly priced, whereas you're looking in South Africa, presumably the opportunities and the are more plentiful and the yield's higher.
Yeah, so these particular properties we're looking at in Paarl, I mean, are going to potentially offer close on a 10% net yield, which is great. Throw in a bit of capital growth there as well. You're probably looking at a 14-15% IRR, which is terrific.
But if you're going to buy in Paarl, I can understand the Western Cape. It's now well documented that the Democratic Alliance knows how to govern places, whereas the ANC is pretty bad at it. In the Western Cape, you seem to be okay. Would you be looking for other opportunities in other provinces? Because, as Magnus was saying, if the governance continues to be poor, the asset class that gets hurt most is the longer-term one, which is property.
Yeah, so I guess, one of the things that we also look at is, so we've invested quite a lot in Mhlanga and Ballito as well. But that's obviously being driven by a lot of this immigration. So it kind of, again, pushes you out of the traditional market forces with this over demand of property in those areas. So I think we largely governed by, where there's good opportunities for growth and movement. But I mean, that's maybe a long answer. The short answer is obviously if there's continued erosion of services and all of that kind of stuff, it's a bit of a catastrophe for some of these areas. So
KZN, you're going into KZN. That's a surprise.
Yeah. So again, those ones are we've done very well out of those. Those are properties that we've got rental guarantees on. I think that those KZN, besides from some of the recent issues, they're still very popular destinations. A lot of the development that was done was for the high-end Joburg clients who couldn't necessarily afford going down to Cape Town. I mean, that market's kind of outpriced itself largely. And so the Joburgers were heading off to KZN and driving those prices up as well. But often at a high end point of view. So we've come in a little bit lower than that and again invested in these sectional title apartments in the area that appeal to people that aren't buying 5, 6, 7 million rand properties. So yeah, we have been there, and those ones are doing quite well.
Rupert, you did say that you are now looking internationally. You've also got some student accommodation, which is another subclass of the property sector, which people really like for pretty obvious reasons.
Yeah.
But when people invest their 100 Rand, if they want to start at that, can they then select individual properties to go into? Say, you've got student accommodation, I think it's a good opportunity, I'm going to put my 100 Rand a month into that. Or do they have to take the whole package? How exactly does it work practically?
Yeah, so that's a good question, Alec. I mean, one of the benefits of, I think, of Easy Properties is that people do get to choose specific properties they want to invest in. You know, they might have a view on the Sandton market being a little bit overcooked at the moment. You know, there's well documented the vacancy rates and the commercial vacancy rates in that area. So perhaps aren't interested in investing there. So they can specifically, each one of these property opportunities that we provide is a standalone investment. So people can literally put their 1,000 Rand here and 10,000 Rand there. You know, we're not a fund in the sense where people give over 1,000 Rand or 10,000 Rand, and you've got fund managers who are busy buying and selling and got a complicated mix of hundreds of different properties. And the investors got very little say about what happens with that particular cash. In this instance, they have got 100% choice in where they want to put their money or not. So it is something which is proving very popular, this additional choice that people have.
Easy Properties, and I know it's from our own account, very easy to find. If you're an Easy Equities client, you just have a look down the bottom, click on Easy Properties, and away you go. And I'm glad to hear that final point of yours, because there will be some who think KZN maybe not such a good place to put money into now, whereas the Western Cape looks fine. But of course, then you get contrarians. So who knows? That's what makes a market, isn't it?
Absolutely.
Rupert Finnemore is the Chief Executive of Easy Properties. I'm Alec Hogg from BizNews.com.